In the annals of modern enterprise, few stories burn as brightly, then dim as dramatically, as that of WeWork. It promised to revolutionize the workplace, a utopian vision of community and collaboration. But beneath the polished facade lay a complex truth. Adam Neumann, a charismatic visionary, co-founded WeWork in 2010. His grand idea was simple yet audacious: transform traditional office leasing into a vibrant, flexible community for startups and freelancers. He believed in the power of shared spaces. WeWork expanded at a dizzying pace, attracting massive venture capital. Its sleek, amenity-rich offices became symbols of the modern startup dream. From New York to London, its footprint grew exponentially, fueled by investor enthusiasm for its unique model. The biggest booster was Masayoshi Son of SoftBank. He saw WeWork not just as an office company, but a technology firm transforming real estate. Son poured billions into the company, believing it could become one of the world's most valuable enterprises. Adam Neumann cultivated a powerful cult of personality. He inspired fierce loyalty and belief in his grand mission. His speeches were legendary, filled with ambitious pronouncements and promises of a better, more connected future for work and life. While the company burned through cash, Neumann's personal and corporate spending soared. Private jets, lavish parties, and extravagant real estate acquisitions became commonplace. This lifestyle raised concerns about fiscal responsibility and company culture. WeWork ventured far beyond offices, launching initiatives like We Live for communal housing and We Grow for education. Neumann envisioned a We ecosystem touching every aspect of life. These ambitious projects further stretched the company's resources and focus. A significant red flag emerged with Neumann's personal real estate dealings. He leased properties he owned to WeWork, creating a clear conflict of interest. This practice raised serious questions about corporate governance and ethical leadership within the company. Despite the outward success, financial analysts quietly raised alarms. They questioned WeWork's path to profitability, its massive cash burn, and the sustainability of its rapid growth model. Doubts began to surface behind the scenes. By 2019, WeWork prepared for its highly anticipated initial public offering. An IPO would provide crucial capital and validate its multi-billion-dollar valuation. The company was poised to enter the public markets as a tech darling. The release of the S-1 filing, required for public offerings, exposed the company's inner workings to intense scrutiny. Investors and the public finally saw the complex financial structure, governance issues, and the extent of its losses. The S-1 revealed glaring governance issues. Adam Neumann held supervoting shares, giving him overwhelming control despite a minority stake. This structure deterred many potential investors who sought more balanced corporate oversight. Further revelations included Neumann trademarking the word "we" and then selling the rights back to WeWork for millions. Personal loans from the company also came to light. These practices fueled public mistrust and damaged investor confidence. As concerns mounted, WeWork's once astronomical valuation plummeted. From an estimated $47 billion, it rapidly fell, shocking investors and the broader market. The tech darling was quickly losing its luster. The media backlash was swift and severe. Publications questioned everything from WeWork's business model to Neumann's leadership style. The narrative shifted from innovation to extravagance, from disruption to disaster, eroding public trust. With the IPO in jeopardy and the company's future uncertain, pressure on Adam Neumann intensified. Key investors and board members demanded significant changes, including a restructuring of leadership and governance. The stakes were incredibly high. Ultimately, the pressure proved too great. In September 2019, Adam Neumann stepped down as CEO of WeWork. His departure marked the end of an era, a dramatic fall from grace for the company's charismatic, yet controversial, founder. To avert complete collapse, SoftBank stepped in with a massive rescue package. They injected billions more, essentially taking control of the company. It was a costly endeavor to protect their initial investment and stabilize the reeling enterprise. The new leadership immediately implemented drastic cost-cutting measures. This included widespread layoffs, affecting thousands of employees globally. The dream of unlimited growth gave way to the harsh reality of corporate restructuring and financial contraction. The company entered a challenging post-Neumann era. The focus shifted from rapid expansion to operational efficiency and achieving profitability. It was a slow, arduous process of rebuilding trust and redefining its core business model. New leadership was brought in to steer WeWork through its turbulent waters. The challenge was immense: restore investor confidence, streamline operations, and prove the viability of the flexible office concept without its previous excesses. The WeWork implosion sent shockwaves through the venture capital world. It forced a re-evaluation of hypergrowth strategies and founder control. SoftBank, in particular, faced significant losses and scrutiny over its investment philosophy. WeWork became a cautionary tale of corporate hubris and unchecked ambition. Its story highlighted the dangers of prioritizing growth at all costs, ignoring fundamental business principles, and the seductive power of charismatic leadership without accountability. Today, WeWork continues to operate, albeit in a much leaner, more focused form. It strives to achieve sustained profitability and adapt to a changing work landscape. The path has been long and arduous, a testament to its resilience and the enduring demand for flexible workspaces. The dust has begun to settle on the WeWork saga. Its rise and fall offer invaluable lessons on vision, governance, and the true cost of ambition. A profound chapter in the history of modern business, forever etched in time.